Yo guys, welcome back to Stock Talk Insider. Today we'll be talking about PayPal, why I have a position in PayPal, and well, what I think will happen, and what my expectations are for PayPal stock, and yeah, what I expect it to do as an investment for me. So maybe for some of you guys who are also investing into PayPal, can have some thoughts on how I view it and on how I view the investment myself. So yeah, we'll start with everything I want to talk about. So I want to make a snapshot of the cash machine and the cheap multiple, and it's PayPal's mode and ecosystem with the strength involved, and of course some growth engines to watch for 25 and 2030. In between, of course, some 5-year projections and margins, FCF and capital allocation, and also a little bit of some catalysts to watch, and of course the risks and mitigation, which is a very important one, of course. So going straight into it, so PayPal has fallen more than 75% from its highs, of course, but now it already has seen a little bit of an upside again. But quietly, it's still one of the most profitable fintechs on the planet, with a new CEO, improving efficiency, and massive cash generation, but people are just not yet seeing the revenue growth, while all of the other things are actually improving a lot, like share buybacks, valuation is getting cheaper and cheaper and cheaper, so it's actually a no-brainer for the stock to go up. All of the products that are coming are starting to generalize some nice forward-moving projections, and yeah, this could be one of the most overlooked comeback stories in the entire stock market. And the one thing that has yet to play out is actually just the revenue growth, but like as I said, a lot of buybacks, and what was it? I thought 30 billion in buybacks coming years. Of course, EPS is growing. We have better margins, and then, as I said before, the products are capable of improving a lot from here. And yeah, just again, this could be one of the most overlooked comeback stories in the entire stock market today. So yeah, where things stand is that the market cap at this point is around 70 billion, the revenue is 30 billion, and we have an EPS of $5.10 normally. I'm going to check that over here with EPS. So EPS is $5.10, but here on trailing 12 months we see 466. Maybe over here, yeah, at this point MacroTrend says 466, but that can be something else, I'm not sure yet, but it's between 466 and $5.10. So I don't know where I get the $5.10 from anymore, but normally it's something between that, of course. So free cash flow is below 5 billion annually, but still it's pretty good, because it's always around the 5 billion. It's sometimes a little bit above it and sometimes below it. The PE ratio is 14x so far, so it's far below peers like Visa or MasterCard, which are between 20 and 30x for PE ratio. Of course, the PayPal's mode and ecosystem strength is that the network advantage PayPal has, because PayPal handles $1.5 trillion in payment volume yearly, unmatched by any standalone fintechs. Integrations like Braintree power stock platforms like Uber, Airbnb, and Shopify. It's sticky and expensive to replace, of course, so that's a big catalyst. Trust mode is that merchants rely on PayPal compliance, fraud tools, and global reach. That trust is hard to disrupt, because that's one of the biggest things in doing business and investing, having trust in the product or company or people around it. So people underestimate how embedded PayPal actually is, and already is in the world of payments rails. The growth engines to look for, in my opinion, these are the biggest ones for now and 2030, is the Braintree expansion. Enterprise merchant processing is PayPal's fastest growing segment. Braintree is up 25 to 30% year over year, so it's nice to see some year over year growth over the 20s and over the 30 percentage points. year over year, driving higher transaction volumes and better margins from routing and tokenization. So that's a very nice plus if we are not yet seeing the revenue growth at this point, because that's around 4%, but it's said that they will improve it to like 6 to 7% in the years coming, so that's also very nice. Venmo's peer-to-peer business is evolving into a real monetization machine. Business profiles, merchant payments, debit cards, and offerings could push Venmo to 3 or 4 billion in annual revenue by only 28. Fastlane and checkout conversion is also something big. So the Fastlane by PayPal, their new AI optimized one-click checkout, which is a very nice way of working with AI optimized products. Then it cuts checkout time by up to 40%, even a 0.1% increase in conversion for large merchants equals hundreds of millions in incremental GMV. AI-powered fraud and risk management, so new machine learning tools are reducing fraud losses and boosting transaction margins on the whole platform, and that directly impacts the bottom line, of course, efficiency and share buybacks. So CEO Alex Chris, the new CEO since 23, is cutting low return projects and redirecting cash to buybacks, shrinking the share count 4 to 5% annually and boosting EPS even with a moderate growth. And in coming years, I don't know how much exactly, but in 1 to 2, 3 years, something like, well, 2 to 3 years, I think, we'll have a share buyback of around 30 billion. And that's a lot. So margins, FCF, and capital allocation operating margins are stabilizing around 18 to 20%. Free cash flow stays above 5 billion per year. Net cash position remains healthy, 12 billion cash versus 10 billion debt. That means PayPal could return 25 to 30 billion to shareholders through 2030. That was it. I was looking for the number and the time period. So from now and in between now and 2030, it will be between 25 to 30 billion in, well, money worth of stock coming back to shareholders because of the buybacks. So even before multiple expansion. Having said all of this, we actually have enough information to make a projection, which I did, of course. So this is a projection like we are talking the whole video already, from now 25 to 2030. So the 5-year projection lies between 25 and 2030. I'm not going to mention every year, so just 25 and 2030 is what I will be mentioning and expecting. So we expect a revenue of 31 billion this year with a $5.5 EPS and a 16-time PE ratio, implied price of 88. So that's something that's actually still undervalued for this year. And that's actually from the upside when I made a projection of $65 of 35%. I think right now it's like 30% or something of upside. So still a lot of upside to get the actual implied price projected in this projection. And starting from only that price already, we have a projection for 2030 of 50 billion in revenue, an EPS of $10.25 with an PE multiple of 22, and the implied price because of that is $225, which is a 245% upside from here, which is a very nice investment for only, well, less than 5 years. So if we take the actual price worth right now, the 88, we actually have not 245%, but we actually have around 270% of return. So 275 actually percent of return in the coming years. But I expect also that the EPS will lie higher, and then the bull case of the EPS of $11.50 with a PE multiple of 24 brings the stock to $276. And actually with the extra percentage right now, we'll have around a stock price of $290, $300 by 2030. That's actually what I believe in, and I believe that will be between $260 and $290 as a projection for coming years, and eventually the stock price that will be the stock price for PayPal in 2030. So some catalysts to watch are the new enterprise partnerships via Braintree, Shopify, Uber, Airbnb expansions, are also going on. So the Venmo business adoption and monetization metrics is a catalyst. And the other three are the AI-driven margin gains, fast lane adoption, and the capital discipline. So the cost control plus consistent buybacks, which is a very important catalyst for PayPal at this point. Risks and mitigation, competition like Apple Pay and Block continue to innovate fast, but actually PayPal is still doing pretty fine. If you know that Apple Pay and Block are already there for a couple of years to be starting with, and second, they are doing a lot of the market share, but still PayPal is doing actually pretty good. So the user stagnation, so flat user base of 430 million, limits volume growth, focus shifts to monetization per user. The regulation, like payment data and interchange oversight, could pressure fees, but these are manageable, not existential, and the company's profitability and ecosystem give it time to adapt a lot over time. The conclusion is that PayPal isn't actually a hype stock. It's a real business with real profits, and it's actually a value investment. So bringing stock back to which it's actually should be valued at. Trading at a discount with stable margins, growing enterprise exposure, and strong free cash flow, a re-rating back to 20 to 20 times earnings would easily justify a $200 price by 2030, which I think will be $260, $290. That's roughly 3x to almost 4x upside in 5 years from a company still processing 1.5 trillion in payments and throwing off billions in cash each year. So if you found this breakdown helpful, leave a like, subscribe, and I'll see you guys in the next one.